Do you know that one small number can decide whether you get a credit card, a loan, or even an apartment? In the United States, that number is called a credit score. And in this video, I'm going to explain what a credit score is, how it works, and why it is so important. In very simple words, a credit score is a number that shows how responsible you are with borrowed money. Think of it as a trust score. Banks and lenders use this score to decide if they should trust you with their money. In the United States, credit scores usually range from 300 to 850. The higher your score, the more trustworthy you appear to banks. Here is how credit scores are generally divided. A score below 580 is considered poor. Between 580 and 669 is fair. Above 670 is good. Above 740 is very good. And above 800 is excellent. A good credit score can save you thousands of dollars over your lifetime. It helps you get lower interest rates, better credit cards, and easier loan approvals. Why credit score controls your life? Now let me explain this very slowly and very clearly, because this is something most people do not understand. Your credit score is not just a number on a screen. It silently controls many important decisions in your life. Even when you don't see it, even when you don't think about it, your credit score is working in the background. For example, when you apply for a credit card, the bank does not know you personally. They don't know if you are honest or careful with money. So instead of trusting your words, they trust your credit score. From the bank's point of view, lending money is a risk. They ask one simple question: will this person pay us back on time? Your credit score answers that question for them. A high credit score says, this person pays on time. A low credit score says, this person may miss payments. That is why two people with the same income can be treated very differently by the same bank. Very important interest rate explanation. Let's talk about interest rates, because this is where credit score becomes very powerful. Interest is the extra money you pay for borrowing money. If your credit score is good, banks feel safe. When banks feel safe, they charge you less interest. But if your credit score is low, banks feel scared. And when banks feel scared, they protect themselves by charging you higher interest. This is why a bad credit score can slowly drain your money without you even noticing. Imagine this situation. You walk into a car dealership. You like a car. You can afford the monthly payment. But the dealership runs your credit score. If your credit score is high, the monthly payment stays low. If your credit score is low, the monthly payment increases. Same car, same price, same person. Only one thing is different: the credit score. Many people think credit score is only for rich people. That is not true. Credit score is for normal people. People who work hard. People who want stability. People who want a better future. And the good news is, anyone can improve their credit score. You don't need luck. You only need patience and discipline. The most important factor in your credit score is payment history. Paying bills on time increases your score. Late payments can damage it badly. Credit usage means how much of your credit limit you use. Experts recommend using less than 30% of your limit. The length of your credit history also matters. Older accounts help your score. This is why closing old credit cards is usually not a good idea. Common mistakes that hurt credit scores include missing payments, using too much credit, and applying for many cards at once. You don't need to be rich to have a good credit score. You just need good habits. Pay on time, use credit wisely, and stay patient. Let's see a real-life example. Imagine two people applying for the same car loan. Person A has a credit score of 760. Person B has a credit score of 580. Both want the same car, but the bank sees them differently. Person A gets a low interest rate, while person B pays a very high interest rate. Over time, person B ends up paying thousands of dollars more for the same car. Credit score versus income. Many people think a high income means a good credit score. That is not true. You can earn a lot and still have a bad credit score if you misuse credit. And you can earn less and still have a great score if you follow good habits. How long it takes? Building a good credit score takes time. There is no shortcut. Usually, it takes several months of on-time payments to see improvement. This is why patience is very important. Who needs credit score? Almost everyone in the United States needs a credit score. It is used for renting apartments, buying cars, getting credit cards, and sometimes even jobs. That's why understanding your credit score is so important. Let me say this one more time, very clearly. Credit score is built. Credit score is damaged quickly. One late payment can hurt you, but many on-time payments can slowly heal your score. So always remember, small habits repeated daily create big financial freedom over time.